right, guys, welcome back to KenorKennot. I'm super excited to have our next guest. His name is Kirian Van Hest. I'm super excited because he has a very, very interesting view on Bitcoin that I really want to dig into. It's really hard to find a true bear case for Bitcoin, and he has an interesting perspective. Welcome to the show, Kirian.
Glad to be here.
All right, so just to set the stage a little, can you give us a quick rundown on your macro outlook for the US? I know you think we're headed for hyperinflation, so give us your thoughts on that.
Well, that's pretty much it. We're heading for hyperinflation. It's a one-way trip. And there's little more to say about it. We've seen the ISM prices blow out. We've seen the jobs report disappoint greatly. That's no mystery because one of the first signs of hyperinflation is, in fact, a labor shortage. And the generous unemployment benefits count as labor. Effectively, the government is hiring people not to work. And if you look at it that way, there is indeed a labor shortage. Now, of course, the government can pay them less or can pay them more, and that'll change the desire for people to be employed by the government, if you will. Mm-hmm. But in general, this is just going to continue. Prices are going to go up. Wages have to go up to compensate because the poor people will run into problems. With the poor people now aren't the people who aren't working, but they are the people who are working and have low-wage jobs. Those wages need to go up. So they will go up. We've already seen that happen now. McDonald's today or yesterday warned that they're going to increase the prices of the Big Mac.
Yeah.
Well, just look at the ISM surveys and just read the commentary of every industry. It's just up and down the chain. So when the prices are raised, well, suddenly then you need to pay more for goods. And that's only going to end up in one place. And it's the people who are getting government support who are now suddenly the poor again because all the wages have gone up and unemployment hasn't. They are now in trouble because they need to pay more and they can't afford the food and such. So they're going to ask for more stimulus and they're going to get it because they're the majority now. So that's just a vicious cycle at this point. There's no stopping that. Of course, this is going to reach a point where the general populace will figure out what's going on.
But what do you think about the Fed saying this is transitory?
They're right. It's not going to last long, but not the way they mean it. The hyperinflation never lasts long.
Yeah.
Because it's incredibly destructive. It destroys capital like nothing else does. Even when you have deflation, at least, everyone who still has money, the savers, no matter how little of them are left, they will keep their money. For instance, I have no debt. I have cash in the stock market or in the bank, gold and silver, and no debt. Now, I'm still poor, but I just don't have any debt. So when deflation happens, I don't have any debt that gets harder to pay back. So if everyone else goes bankrupt, my savings just go up in value more because of more deflation. And at some point, goods will be so cheap that I'm going to say, I can buy so much stuff with my money now. I'm going to spend this. And then it ends. But inflation is different. That money in the bank is becoming less and less, worth less and less. So indeed, what the Fed says will happen. People will spend it because they're forced to. But the problem is that they're forced to spend it. And as such, all the goods that they buy with the stuff run out. And that is what we're seeing now all across the United States.
Yeah, did you see a video that there are a couple of people who went to a gas station and they had no gas at all?
Yeah, that happens to be because of that ransomware attack on the Colonial Pipeline, which just goes to show how vulnerable the supply chains really are. You gotta think about this. Think about this. One ransomware attack that shuts down the pipeline that transports like 25% of all gas on the East Coast. People panic. Gas is gone. Prices are going to go through the roof. This is a week. It's not even a week. And that's one pipeline. What would happen if China and the US get in a conflict and China starts a cyber war? Where they're not trying to do this to make a quick buck like those criminals were. No, they're trying to actually damage the thing. So as far as we know, by the way, the Colonial Pipeline attack was done with a ransomware group made by a group called Dark Side. And they already stated that they're not political or anything. And they actually didn't mean for stuff to go this far. They don't mean to cause any actual damage. They just want to make money. So they're going to actually QA their customers now, which is just a really weird situation. But that's the point what I'm trying to make. They're not trying to damage the pipeline. It's an accident, and someone used their software for a means that they don't even agree with. What if they were a Chinese hacker group that was specifically targeting the pipeline to shut it down as long as they could? In that case, the gas shortages would continue, the panics would continue, prices would go through the roof. This is how vulnerable the US really is. And that's the scary thing about it. Now it was just a bunch of criminals who got out of hand. But if this was a true enemy actor trying to disable infrastructure, and not just one pipeline, but all of them, well, you can see how quickly that would go out of hand.
Yeah. So how far away do you think we are from hyperinflation? How do you see this playing out? Because I was reading about Weimar Germany, and
it's happening right now, today, yesterday. I know.
I mean, they're not printing as much as as Germany during their hyperinflation period.
I can date it for you. I can date the date where hyperinflation started in the US. That's the 16th of September, 2019. What is known as the repo crisis is the day that America went bankrupt. And why is that? It's very simple. Let me ask you a hypothetical question. Are you aware that in response to the repo crisis, they started up QE4 and started printing 60 billion a month?
Yeah.
Now, let me ask you a question. Had they stopped QE just dead in its tracks in October of 2019, would the repo crisis have returned and would the market have crashed again?
Oh, it'll crash big time, dude.
All right. Same question for November 2019. Would the market still have crashed if they quit QE then?
Easily.
All right. I mean, December 2019, I don't even need to ask you. Oh, no, I'm not even done. Because in December 2019, to avoid a end-of-year repo apocalypse, as predicted by Zoltan Pozar, they printed $500 billion in December. So clearly, that's to prevent a crash. So it would have crashed if they hadn't done it. Then we get January. They were still buying up more QE or repo. They were doing more repo operations in January than in December. So I'm pretty sure the answer would still be yes. In February, the answer would still be yes. And in March, the market crashed because of COVID anyway. And then QE was put in overdrive, and they printed $1 trillion a month. And they printed $1 trillion in April too. And they've been printing 120 billion a month ever since, to this day. So let me ask you, to this day, if they turn off QE in May of 2021, would the market crash?
Definitely.
So we can basically conclude from this entire story that had they turned off the money printer at any given time in since the September of 2019, since the repo crash, the market would have crashed. Now, if the market would have crashed, the pensions would have become worthless because the pensions in America are all underfunded and broke, but they're promising 7 to 8% yearly returns. And that is how they are still, quote unquote, funding themselves, because they can just sell into the market and they won't go broke right now. Of course, that's a lie because they've never made these 7 to 8% returns. It's total fantasy. But if the market goes down, that fantasy gets broken, pensions go bust, people will need to actually get cut back on their pensions. That'll cause a riot, revolt, that'll crash the market further. That's going to cause people on margin to blow out. The debts will not be repaid. That's going to cause a debt implosion. That's just going to cause deflation at the wazoo. Banks are going to fall over. Basically, America would go bankrupt because America in that situation just cannot finance the interest expense on the national debt. Of course, in such a chaotic situation, the yields or on the debt would go up again. They went to 10% in September 2019, and that's on the 24-hour loans. So you can bet the 10-year will be at 15 or 20%. Well, we both know that the US at 15 to 20% for the 10-year would go bankrupt tomorrow. So every time you run this information through, you always run into the same end result. Market crash, default on the sovereign debt. Always. Every single path leads to that point. And that has been true since September 2019. So since September 2019, the US has started the process of hyperinflation. But you refer to Weimar Germany. Well, Weimar Germany is a good case because Weimar Germany lost the war in 1919. Well, it stopped in 18, but they signed the treaty, I thought, in 1919 or somewhere around there. Yeah. In any case, in the treaty, they were forced to pay war reparations, which everyone knew they would never be able to pay. Everyone knew this, yet the first payment of those war reparations was a shipment of gold from Germany to England and France that was humongous. And then they went to the paper mark. So Germany hyperinflating was inevitable since the end of World War II because they had to pay the reparations and they couldn't fight anymore to say, no, we don't. So Germany actually started hyperinflation since signing that treaty. But since they still had a shipment of gold to send, the Weimar didn't really go anywhere until the gold was sent and the paper mark was introduced. Now, that didn't change anything because they still had to pay the war reparations. So the next time they paid it in fiat, obviously they have to print it. So that's going to cause inflation. And then I ask you, why did the Weimar not hyperinflate between, if I get it right, I think August 1920 to about July 1921?
Yeah, that was a period of super stable. The currency was super stable just for that 1 year before it went crazy.
Yeah. We're in that period right now. Well, maybe not that period, maybe something before that, maybe something after that. Obviously, I don't have a crystal ball, but the patterns are the same. We don't have to immediately hyperinflate. So what the cause is here and what the mistake is that people make when looking at hyperinflation is that we're looking at history through hindsight. If we're talking about Weimar Germany, we can talk about 1920, 1921, 1922, 1923. It takes seconds for me to list those years because it has already happened. But if you were living in 1921, you had no idea where the Weimar was going to end up in 1923 because it hadn't happened yet. For those people living at that time, it was a process. For us looking back at that time, it's an event. And that's what you got to remember, is that when people are reading about this time in US history, in European history, in Asian history, in 20 to 30 years from now, and say it's like a 20-year-old kid, so he wasn't born, he didn't see any of this going on, he's going to have the benefit of hindsight. Maybe he sees our video that we're doing right now as part of a history class, and he already knows what is going to happen, but we don't. We have to live day by day, minute by minute, second by second, and go through this entire process until it is done. But it is very much a process, and it is already started. In fact, we are not even in the first phase of hyperinflation. Well, not in the US. I can't speak as to Europe because I've not been paying that close attention. Europe's screwed. It's screwed, but later than the US. Simply because Europe can't agree on anything, so they can't even agree on how to collapse. This is going to take longer. So the first phase of hyperinflation in the US lasted from September 16th, 2019 to approximately the 11th of November, 2020. Approximately, I'm not entirely sure about that date. Usually it's a psychological trigger that triggers it. And on the 11th, there were some decisions about some courts that Joe Biden had won a couple of critical states. So you could say that the society at large had accepted Biden as a winner at that point. Like we could see the future. We could see where the future was headed, and it wasn't in Trump's direction. Let's put it that way.
Yeah.
So the way this exhibited itself is in the change in the M1 stock of the US dollar. Now, the Federal Reserve retroactively changed this, but I take screenshots because I knew they were going to change the measures because they're bastards. Anyway, so from about November onwards to December, January, when they changed the measure, you can see the US M1 money stock starting to go up almost vertically. Like whatever happened in March 2020 happened again in November of 2020, but only to the M1. If you look at the M2, it basically still goes up in a linear line. And that's interesting because it means, well, the difference between M1 and M2 is that M1 is the cashiest of cash. It is what you can immediately spend and buy as many things with as you can possibly. It's the paper in your pocket, the money in your bank, cashier's checks, anything that anyone will accept as money right now. M2 doesn't just include that, but it also includes all the money that can be converted to cash fairly quickly, such as money market funds, savings accounts that are usually locked, but you could conceivably pay the penalty and immediately spend it into the market, stuff like that. So the fact that M1 started going parabolic while M2 still went linear means that people were converting their M2 cash into M1 cash. And basically the hyperinflation was moving into circulation. Now, that happened last November, and all of a sudden now, just a few months later, ISM prices and everything is blowing the fuck up. You can look at price charts of, well, I suppose the most iconic are banks. Just go look at any price chart you want of a United States bank, and especially the big ones: Goldman Sachs, JP Morgan, Citigroup, Morgan Stanley, Wells Fargo. All of them start going parabolic in the last week of October. I think the 25th on the weekly chart. All of them, just the banks go straight up. And why? Because the banks are best at generating currency. Like, they can just loan out more. And if the debts, if there's inflation, debts become worth less, easier to pay back. So the banks are actually less in trouble. Of course, the banks will blow up, but that's not going to happen until way the end of the process. And we're not at the end of the process. So the commodities have done the same. They followed the banks. Well, the banks followed the commodities, I should say. And a few months later, after M1 went parabolic, yields blew out. We had the yield sell-off in February. It's the 3 months after the M1 goes parabolic and M2 goes nowhere. So we're already in that second stage of hyperinflation. And what the difference is between the first stage and the second stage is that the first stage is based on fundamentals. If they keep printing, the market keeps going. If they stop printing, market collapses. Just fine. It's all based on just numbers. The second phase is where the numbers stop mattering and where fundamentals start changing into psychological triggers and psychological behavior. At some point, it doesn't matter if they're going to cut back how much they print or announce that they're going to taper in the future or going to rate hike in 2024. At some point, that's not going to matter anymore. The currency is just going to continue to hyperinflate because people do not want to hold the currency anymore. The more they expect it to lose its value, the more they will spend it, but the less they will accept it. They will only accept it if they have to, and preferably just before they can spend it. That's something you'll see in hyperinflation. For instance, in Weimar Germany, you had to pay for dinner the moment you ordered it, because after you were done eating, the currency had lost so much value that you would have to pay so much more. So that sort of stuff will start happening. Well, I just wanted to finish with once that stuff happens, we're basically going to switch to the third phase. When that happens en masse, everyone is in that psychological panic. No one wants to hold the currency anymore, regardless of what the government does. They can stop printing at that point, and it'll still hyperinflate because no one trusts anyone anymore. And that process never lasts long. At some point, the numbers mean nothing anymore. You can't pay 5 trillion for a bread. It doesn't work that way. We have no connection to that. At that point, you're just going to not use the money anymore. You're going to find something else. Silver, gold, those are the most common ones because they are the historical monies. And that is why you see everyone, people like me, is saying, no, not crypto, gold and silver. Because that's where everyone out there, every single human, once shit hits the fan, once they realize what's up, they're not going to look at something that's 12 years old. They're going to look for the ultimate safety. 5,000 years beats 12 years. Now, I'm not saying that crypto can be a safe haven in the future, and I'm working on it. But right now, it's not. It's not. In March 2020, it went down Bitcoin went down 66%. Ethereum went down 85%. I have a screenshot.
Yeah. So my question is, I have 2 questions from that. So the first point is, you talk about the first phase and how the Fed can't stop QE basically, but is QE inflationary if banks don't lend? Because right now they are printing, but they're not lending. The banks are not lending. And secondly is, if we talk about US being insolvent, then can Bitcoin be a protection against a credit default?
All right. What was the first question again?
Is QE inflationary if banks don't lend?
Yes, simply because just because they don't lend doesn't mean they don't make any money. If you look at any bank balance sheet over the last 10 years, they made profits. The last thing I can remember is that JP Morgan made $1 billion worth of profits off of precious metals alone in 2020.
Yeah.
That's profits, profits. So where does that money go? If they are not lending it out, where the fuck does it go? Well, it's going into the markets. So QE is not just inflationary, it's hyperinflationary. Why? Because it's newly printed money, and newly printed money is always hyperinflationary. The reason why we haven't seen it yet over the last 10 years is because all that hyperinflation has been localized to the synthetic markets. And by that, I mean the stock market and the bond market. And the reason why I call them, and many people do, we call them synthetic markets, is because we all know that if you buy a stock and you don't sell it and it goes down, there's not really a problem because it's on paper. You haven't really lost anything. You only lose something if you sell it again. So if you just wait and you hold it goes up again, then you're in profit. And when you're in the green, as they say, and you sell then you're in a profit. But as long as you don't sell, those profits too are on paper. And that means that it's not circulating because you can't take your Tesla share, go to the store and buy a bread with it because the store won't accept your Tesla share. The store will tell you, no, you need to trade your Tesla share back into cash and we'll accept the cash. So that effectively separates the real world economy from the virtual economy, or well, the synthetic economy in this case, because I'm using virtual in my books. But as long as the money is there in the synthetic markets, there's not a problem. They can just keep printing, keep putting it in those markets. You can see the asset prices go through the roof, as we have seen with the NASDAQ going all the way up to 14 fucking K, which I would have never guessed, by the way. And well, it could just stay there. It could just stay there. Doesn't cause any harm. But the problem is there's a leak. And that is what the CPI and all the other official inflation statistics have been measuring for the last decade. They haven't been measuring inflation. They've been measuring the inflation leak from the synthetic markets because companies still, one, pay a dividend. The dividend is new money because their revenues go up, or well, their share price goes up. They issue shares and then they use that to expand business, and then the share price goes up further. And if you sell them, well, then you take profits. And when you take profits, it's those monies, you buy a boat with it or you buy a house with it. Well, that starts circulating into the real economy. If you get dividends, that starts circulating into the real economy. You get bond coupons. I know no one cares about them anymore with so much negative debt, but it took a while to get here. And all the time that bonds yielded something and the price went up, well, you're still going to get money from that. So that's what the CPI has been measuring all this time. That's the dividends, the coupons, the profit taking, and whatever came out of the synthetic markets and then started circulating in the real economy. But the moment these synthetic markets all exit into the real economy, and then that money starts circulating, that's when hyperinflation hits. So there's a difference between inflation when it's created and inflation when it hits. Currently, the inflation's already been created. It's waiting in the wings. It's raring to go. It's just, come on, man. Come on. I'm fucking ready, man. I just want to go. And Jeff Bezos sold 12.2 billion worth of stock last year. And I'm pretty sure that went into hard assets, gold, iron, copper. I don't know what he's put the money in, but I do know that it started circulating into the real economy. And that's one of the reasons why M1 went parabolic. Because he's not the only one doing that. All the smart people are. So that's the reason why QE is inflationary, but we haven't seen it yet because it's all this time been contained to synthetic markets. And the way it's been contained to the synthetic markets is simply stocks always go up. And as long as they go up, no one thinks about taking profits. Because why would you? They're going up. But they're not going up anymore, are they? They've been going quite sideways and a little bit down recently.
I think some people are still staying optimistic. It will go up.
Some people are idiots.
I think it will melt up, but not in the sense that they're increasing in value, but just the USD is getting destroyed. So I think we're going to have an asymmetrical crash. Before the actual hyperinflation, before the actual complete parabolic curve, I still think we're going to have a correction. We already had one. I mean, I don't know if you've seen the markets today, but they sold off at the open, and they sold off last week too. So, but it got bid back up, right? It got bought back up.
Yeah, it got bought back up, but there's also plenty of sayings about not catching falling knives.
Yeah. So
one of the ratios I'm looking at is the NASDAQ to S&P 500 ratio. Because around 2000, the dot-com bubble, there was quite a spike in that one. Currently, there's another spike in it that's just as large as the 2000 bubble one, and it's already topped. Actually, it topped a few weeks ago in March, I think. And after today's sell, if it wasn't a bid back up, that would have basically crashed that ratio because the NASDAQ went down way further than the Dow Jones or the S&P 500. And that is also something that you saw in March of 2000. It's that the NASDAQ topped first and started going down while the S&P 500 continued up. And that's caused the S&P or the NASDAQ to S&P 500 ratio to collapse. It went sideways for a while, and then after May or whatever, it just completely was annihilated. And if the crash, if the run-up is symmetrical like it was back then, and this peak is far fatter, if you look at the chart, it's just a way bigger mountain, it should collapse in July this year. That would be about the same timing, July, August. So that's when the S&P 500 and NASDAQ would go falling down. Mind you, that's not a solid prediction. That's just based on one indicator. But it is one indicator that has topped and it is not gone back up. It's going sideways.
So do you think Bitcoin can provide a protection against the US credit default?
No.
Why not?
Because Bitcoin is also being pumped up by artificially printed currency, I suppose. And that would be Tether and the stablecoin conspiracy.
Yeah, I read about that.
Which sounds, by the way, like a 50s rock band, Tether and the stablecoin conspiracy. But yeah, it's true. I'm dead sure it's going to happen pretty soon, in 7 days, actually, 1 week. Tether is supposed to divulge the exact contents of its quote unquote reserves, which they say have a dollar value of about 56 billion, but that is highly disputed. Actually, I say 56. It's been 5 minutes. They may have printed more.
Okay. So for those who haven't read your article, can you give like a brief overview of why you think Tether is not who they say they are and how it's going to affect Bitcoin?
Right. So what Tether purports to be is, well, originally it was a stablecoin created pegged against the US dollar. So that's the concept of a stablecoin. 1 Tether equals $1. Now, they already ran this scam in 2017, and this is just a replay of that exact scam, where they said they were backed by dollars, but in fact they were not. This is not up for debate. They have already admitted this to well, they never admit anything, but the New York Attorney General has convicted them for lying about this and have stated that in 2017, at least, Tether was not backed by any dollars at all. So they already counterfeited effectively the US dollars. But the New York Attorney General case was very limited, and it was only limited to the scope of Tether cannot mislead investors. And they promoted themselves as a fully backed stablecoin when they were in fact not. So as a result of that ruling, they now have to disclose all those reserves, which is what they're saying is backing Tether. And well, we get to know why. But to get back to why I think Tether is doing it again, at the start of 2020, Tether had a market cap of $4.1 billion. Now, I'm even though we already know that they lied and they are now convicted criminals, I'm still not even. I don't have to argue with anything before 2020. I'll give them that. On the 6th of January 2020, they already printed $500 million. So this was long before the crash. Suddenly, out of nowhere, they print $500 million. So I've never heard around the time any investment or any investors or any news or anything like that of a large party investing in stablecoin. And that's suspicious as fuck to begin with, because when Michael Saylor invested into Bitcoin, he also put about $500 million in, and everyone lost their shit. So the fact that happened on the down low is already suspicious as hell. Then, of course, we get the COVID crash and Black Thursday, as it's called within the crypto space, I hear, where Bitcoin lost 2/3 of its value and Ethereum lost 85% in a day. Now, I suspect that the reason why that happened at all is because Tether ran into redemption problems because of the COVID crash. We've seen the dollar spike, or the DXY went to 104 from like 98 or something. So there's a considerable spike. And considering Tether is supposed to be backed by dollars, or at least dollar value, I suspect that behind the scenes, people started redeeming Tethers for dollars en masse, or whoever has the capability to. So Tether only had, well, they ran out of actual dollars, and their only reprieve was to sell whatever they had on the balance sheet, which is Bitcoin, into the market, and it caused the market to crash. And they basically made it by the skin of the teeth, because they had to quit at 4.5K or 3.5K. I don't know. It dipped very low.
Yeah.
But that was the gambit. Sell into the market, hope they survive. Well, they survived. But as a result, on the 30th of March, so a week after the historical crash had already happened, Tether prints 1.2 billion or something like that. 1.5 billion. More than a billion in any case. Just go look at the market cap Tether around the market crash in March, just from March to May. And you'll see it go up on the 30th of March, 1.5 billion, out of nowhere. Then, I think on April 30th, or a little bit later, they print 3 billion. Like that.
Yeah.
So they started in January 1st, 2020, they had 4.1 billion worth of market cap. By May, they had 10 billion worth of market cap. Now you're telling me that this little bitch company that already lied and is convicted for lying, suddenly managed to up their market cap by 250% in the depth of the biggest historical crisis ever. Because we've had a lot of crashes, but none of them went this fast.
Yeah.
Not on the way down, not on the way up. That alone is enough bullshit for me. And I started calling out Tether since May, but I really started bashing into it since last fall. However, they just continue to print. After this is another funny story. The New York Attorney General case started in 2019. It ran all the way through 2020. And on the 17th of July of 2020, the news came out that Tether had lost an appeal. They had to produce a certain amount of documents for the New York Attorney General case. But while they were doing this, a loan from Tether to Bitfinex was frozen. And that loan was reported as 800 million. Might have been a bit more, a bit less. However, 5 days after this ruling that froze that credit between Bitfinex and Tether prints 900 million. Market cap goes up 900 million on July 23rd, 2020. Less than a week after that ruling. No one thinks this is suspicious. They literally just printed 900 million for themselves and they don't give a fuck. Now, that was when the market cap was 11 billion. It's 56 billion now. They went up 15x almost in 1.5 years. Not even. Sure. Fucking buy crypto. If you believe that, fucking buy crypto. Just go all in. Mortgage your house, sell your car, go in. Fuck it. Because you're stupid and you deserve to lose everything. And I'm going to laugh when people do.
That's what Michael Saylor's asking everybody to do, right?
Yeah, fuck Michael Saylor. Son of a bitch. No, seriously, even then. I don't give a shit. He is delirious, delusional, and a fucking moron. He's talking about monetary energy. Are you shitting me? There's no such thing as monetary energy. Well, I can use a bill to light a cigar. then maybe I can get a little bit of energy out of the paper. But monetary energy, it's just such a stupid concept. My God. And people fall for this shit too.
Michael Saylor argues that, Bitcoin is not fighting an asset war. It's not fighting a currency war. It's fighting an asset war. So it can be used as a store of value. So it doesn't necessarily have to be a currency.
Yeah. No, hang on. That's the last of his absolutely stupid things to say. Bitcoin, a cryptocurrency, is not a currency. Really?
That's what he says.
We're fucking really? If that's what he says, if that's what he believes, he has just single-handedly destroyed the complete use case for Bitcoin. Because if it's not a currency, it has no value. If the value of Bitcoin is not in the transacting, which it is, and which is the reason why it doesn't have value, because all of the other cryptocurrencies can transact better.
Yeah.
But if it's not, then it has no value. It just has no value. Let's get into the store of value argument because that's the most used. All right, I got a question for you, Kenneth. It's a very simple one. What value is stored?
They usually claim it's the energy of the mining the Bitcoin or the network value, right?
All right, can I put a Bitcoin in my car and will it run?
No.
Well, then it's not storing any energy, is it? Next.
Okay.
What's the next concept you got? Throw them at me.
I mean, they say that the utility is that the transaction, but
That's true.
Yeah, but so if you talk about like things like art or any asset, actually, it doesn't need to be used as a currency to have a store of value, right? It could still store that value.
No, you're confusing two things. You're confusing a store of value with a transactional intermediate. And that's not true. You do not have to be a store of value to be a transactional intermediary. You can,
but it must be transactable, right? So if I can't sell my art, that doesn't give it its value.
Yeah, but you can't use Bitcoin for anything to buy anything either. And if he says it's not a currency, it's never going to be used to buy anything. I can't buy anything with Tesla shares. I talked about that earlier. I can't use NFTs to buy my bread. I can't use Ethereum to buy my shoes. Payment providers are now starting to add that sort of functionality, but you'll notice that every time they add that functionality, they're not actually using Ethereum to transact. They are selling Ethereum back into the markets for dollars as soon as they can. So if you ask me, the only possible value you can say is being stored into cryptocurrency is the value you pay for when you acquire the asset, dollar value.
Yeah.
But the dollar is worthless. So you're not actually storing any value.
Couldn't I use the same argument on gold and silver? Because you can't actually use that to buy bread right now, right? You can't go to a grocery store and give them a gold coin or a silver coin.
No, but I can trade it to a jeweler who will be able to use it for his craft, and they will be able to trade me the intermediary that the shop wants.
Yeah.
Because they need to do. So
couldn't you say the same for Bitcoin? Like I can trade it to a greater fool or whoever who is willing to give me dollars, and then I can.
No. There you have it. There you have it. Exactly. Everyone's waiting for the greater fool. Do you think when we're in a situation of inflation where everyone's trying to get rid of currency, they will take your fiat? They will take something that has no other value other than the ability to transact, which is not a unique value because every other crypto can do the same. What is the transactional value of Bitcoin over Bitcoin Cash?
None.
There you go. That's simple. They're exactly the same. It's a fork. Of course, they're exactly the same.
So, I got it. So you see, because the whole reason why fiat even works is because we trust in the government backing the dollar. So this is the same as Bitcoin, right? It has a sufficient network and a sufficient scale. Doesn't it represent the same trust?
Nope, you're wrong. Simply because it is not just trust that we ascribe to fiat. For instance, there's two things here. First off, the US dollar isn't fiat, it's debt. And debt has value. Now, the US dollar is being printed so much that the debt backing that value is also inflating because it's an asset. There's more debt, so the value of debt is going lower. At some point, you have so much debt that it becomes impossible to pay back, and then the debt reaches a value of worthless. But it's not until that point. Now, that means that the value of debt is based on fundamentals and not just faith. Yes, it requires a faith component because you have to have faith that the other one doesn't decide, even though he can, to not pay you back. AKA, he must decide to not screw you over.
Yeah,
that is the faith component. Now, with fiat, it's completely different. With fiat, it is almost all faith because you basically have to have faith that the person creating all this fiat is not going to create any more fiat. Now, Bitcoin solves this problem by basically mathematically limiting the amount of fiat it can print, and that's the 21 million Bitcoin. In that sense, it is better than the US dollar because the US dollar has no such limits. However, even fiat without intrinsic value can work. It is simply, in that case, a case of tax revenue versus government expenditures. If the government takes in more taxes than it spends, or money it spends into the economy, then it doesn't need to keep a balance sheet. Because if you take in $1 trillion in taxes, but your expenditures are 900 million, well, then you have an extra 100 million. Does it matter that 100 million is in gold, dollars, sticks, cows, Tesla shares? No, it doesn't matter. Point is, that money does not re-enter circulation. The total amount of money in circulation shrinks. You have deflation. So it's not just a case of fiat is bad, fiat is good, debt as money is bad, which it is, by the way. But it's simply a case that crypto is fiat, and they've limited the amount of fiat that can be printed. But that doesn't make it any less functional than fiat is. So fiat currency is only capable of transacting if it retains its value, simply because the inflation deflation rate is 0. In that case, sure, it could be used as a store of value. But because of the historical problems with fiat, namely that it always hyperinflates because the politicians are never capable of keeping the dick in the pants, you don't use fiat as a store of value. Now, why gold is a store of value is because you are not storing dollar value. You are exchanging the dollar for an asset, and that asset has its own utility value. Now, utility value means whatever it does, meaning the value of a water heater is in its ability to heat water. If you have a water heater that does not work, then as a water heater, it has no value to you because it does not work. Maybe it still has value to you as a liquid container, but that is all it will do. And if you are trying to sell this water heater to someone else and they ask you, does it heat water? And you say, no, but you can use it as a container. Then they're going to tell you, all right, I will pay the price of a container, but not the price of a water heater. So in that sense, whatever value a asset has, and it's not even whatever value is stored within an asset, that's the right way to say it, is the ability to use that asset in the future. If you, technically speaking, a pair of scissors could be a store of value because you are buying scissors for the ability to cut hair, for instance, or to cut things. And as long as the scissors cut things, it performs its function and it holds its value. If you then sell that a pair of scissors for the same price you bought it at, because it still functions the same, it still cuts the same, then you've effectively stored value through time because you bought it for the same amount that you sold it and you had the use of it all that time. Gold is the same because you can turn it into jewelry. Silver is the same because it's used in industry as well. And it has a monetary history. But regardless, outside of money, whatever, you can still use silver and gold in other forms of industry. So let me put it this way. Bitcoin suffers from something I call the next transaction problem. If we were to assume, theoretically, that for some sort of reason, you couldn't transact Bitcoin anymore, but obviously you still have the Bitcoin because you have the wallet on your PC and you've got the keys in your head, whatever, you still own the Bitcoin, it still exists. You just can't transact it anymore. Network is down, the internet's been bombed, whatever. Then what do you still have? What is the value that you still hold in your hand? Well, in the case of Bitcoin, it's nothing because it's just a few ones and zeros in supposedly the right order, but without the ability to independently verify it, you can't even, it's pointless. It says that it is what it is, but what it is useless. However, if we use the same hypothetical situation for gold, let's say you buy a 1 ounce coin of gold, the government forbids, outlaws, and strictly enforces any and all transactions of gold whatsoever, and no one will take your gold from you, but you're still allowed to use it as jewelry or whatever. You're just not allowed to sell it because we're trying to limit transactions here. In that case, you can take your gold coin, you can basically just go to a jeweler, or you can even do it yourself, and you can give him this gold coin and you're going to tell him, make this into a necklace, or make this into a couple of nice earrings, or make this into a ring. And of course, you need to pay a little bit for the man's labor and skill in whatever intermediary he asks from you, maybe a little bit of the gold, you don't know. But at the end of the day, you're not going to have a gold coin to transact anymore, which is fine because the utility value of the coin was to transact. You can't transact, so it lost its utility value.
Yeah.
But now you gained the utility value of the jewelry, of looking nice, of having status, of showing that you are capable of affording this asset. So, and if you're no longer capable of trading gold or to transact, well, let's say you can still trade gold, but you can't transact with it. Well, doesn't make the gold any less rare, doesn't make the gold any less desirable, doesn't make it any less shiny. And that's something Bitcoin will never be. Bitcoin will never be shiny. It'll never be innate to us. So if you're talking about the whole system having value, sure, but then it needs to do something only it can do. And as far as Bitcoin, the only thing it can do opposed to other fiat is trustlessly transact and independently verify. And those two things any crypto can do. So it's not like Bitcoin doesn't have any value. It's just that the value it once had has been lost to time because it's tech, and first generation tech is never the savior. Name me one generation, name me one technology, first generation tech that is still with us today of anything in history.
Yeah, that's always something that takes over, something better.
Yeah. In the gaming industry, it's we went through the process recently with the battle royale genre. It started as a DayZ mod, which is just another, which is a mod of another game, but it caught on. Then the guy made a standalone that caught on far more. Then another company saw that in South Korea, basically copied the concept, but made it less buggy, well, a little bit less buggy and more accessible. Everyone piled on it. Epic Games saw this, created Fortnite in response, which was just the same thing, but much more polished. And that blew up like nothing else before. And for a very long time, Fortnite was Battle Royale. But it's not how it started. That's always how it happens. Someone is first. That first thing does very well, but because that first person doesn't have the benefit of hindsight, it can't ever be the best thing. Because to err is human. We all make mistakes. There are mistakes in Bitcoin that I've written a couple of books where I try to fix those mistakes in Bitcoin because I looked at it for a very long time. And I'll say this to you and anyone else that's even in the books. I, at the start, when Bitcoin was invented, said it didn't have any value at all because it was just, well, it's using up a lot of energy for very little transactions. And we have better systems, so it just doesn't have value. But I looked at that opinion throughout the years and I revisited it. I revisited many times, but I changed it twice. Where at first I said, all right, the ability to trustlessly transact has value, but Bitcoin still doesn't. And then at a later stage in life, I said, all right, the ability to trustlessly transact has value, and the ability to independently verify those ledgers also has value. But no matter how many times I look at it, the fucking coin just doesn't. You don't need it. You don't need it. You can use blockchain to transact piles of copper. You can use blockchain to do anything. I now know of a company of ABAX, which launched in Singapore, actually, the Singapore Commodities Exchange, which is using crypto to create digital bearer bonds. Or at least that's the direction they're going to. They're
digital what?
Digital bearer bonds. Basically, a bearer bond is a bond that offers you title to whatever the bond is. So if you hold the bond, you have title to whatever the bond describes.
Yeah.
And if you don't hold the bond, then you don't hold title. So it's basically money, but to assets, specifically right to assets.
Yep.
And anonymous rights to assets. So you can actually trade these bearer bonds like you can trade currencies. Only except that if the currency is gold and you trade dollars, then you're effectively trading gold. Bearer bonds are, well, a pile of copper, a pile of gold. It can be anything. The bond denotes it. It's just that each bond has a specific amount tied to it of a specific asset. And whenever you claim these bonds, you get that asset. And you just, have to protect it yourself because the bond doesn't know who owns it. So ABAX probably eventually, well, I heard this from Eric Townsend, who invested in it. is probably going to head that direction in the future. And that is just an application for blockchain technology, which uses the distributed ledgers, which uses the trustless transactions, because you got to get this bearer bond from one account to another. But it doesn't use any coins, because the bonds have their own utility function, and that is to describe many assets and standardize them and trade them independently of the assets. So it's an ability to transfer title, but it isn't currency. Currency, it has no title by default. That sort of applications we will see more of in the future. And I use that perspective in essence in my books to fix the problems that crypto has, and to actually give value to a digital thing, a digital value too, a completely digital value. Still works according to all sound money theorems, but none of the current crypto look like it. They just don't.
So why can't we? So the other argument for Bitcoin is also that it's a hard cap at 21 million, right? But you were saying that we can't have
scarcity alone isn't enough to denote value.
But isn't that what you want out of sound money, like something that doesn't constantly inflate?
No, then you get the mid ages. Having a permanently deflationary currency is fucking stupid. Because what currency is for is just to provide liquidity. Yeah. Now, we live in a time where there's too much liquidity because the federal government keeps printing, and they shouldn't. However, you're not going to cure the patient by killing them. You need inflation, because sometimes the currency just represents real life value. And the more value is added into society, the more currency you want to represent it. In my books, I give a very simple example. Suppose you have a small economy of 10 people with $10 and 10 breads. In that case, the bread costs $1 because you have 10 people buying 10 breads for $1 a piece, $10 in total. Now, suppose one of them died. One of the people died. Now, the baker sees this, and he doesn't bake 10 breads, he bakes 9 bread. But we don't change the currency. So now we have 9 people buying 9 breads for $10. Well, that necessitates that each and every one of them has to pay about $1.11 for each bread. Because then 9 times 1.11 ends up with 9.99, and then repeating, of course. And then you're back to the complete monetary base. Prices will rise. And if prices rise, that means that all those 9 people who need that money to afford the next bread need to get more wages. Can the employers of those people afford those wages? If they cannot and they don't adjust with them, then we have a purchasing power discrepancy. All of this is going to lead to some very bad effects down the road, which we are now seeing in reality, which is the supply chain deficits all over America, because they're simply, this is what happened. People need to have more money, and more money is printed, so prices go up. Anyway,
yeah, but so
in this situation, hang on a second. In this situation, if you have 9 people and you have 9 breads and you have $10, if you deflate $1 from the money supply, then you have 9 people buying 9 breads with $9, and bread continues to cost $1. Mm-hmm. So that is why we have money and why we have inflation and deflation and everything, because sometimes people die, sometimes people are born, sometimes there's less demand for money, sometimes there's more demand for money, depending on how many people actually demand for it, and the monetary base needs to adjust. So if there are 10 people buying 10 breads for $10, and now there are 11 people buying 11 bread for $10, well, then the price of bread goes down. And then the income of the baker drops. For people, actually, it would be beneficial because they now actually get, they buy a bread with $0.9 Oh God, it's a mess. But
Isn't that a good thing?
You would think so, but that case, the other one loses out.
True.
If the bread goes up to 111, then the people need to find more currency to pay for the bread. Some of them can't, so some of them will starve. If the bread goes down in price, people will have to have more currency for other things, but the baker suddenly loses purchasing power. So either the production side loses or the consumption side loses.
But that's how a free market works, right? Then the supply demand will work itself out over time. Like he will respond to the decreased need for breads or
no, because the bread, God, let me work this out here because, in the book it's all structured, but now I'm trying to figure it out. Bread costs raw materials too. And if the baker suddenly has to bake 11 breads, but his income doesn't change, he has to somehow pay extra for resources that he can't afford. So in that case, the raw resources that go into bread need to also drop in price. This causes the wheat farmer who makes the raw resources for bread to also gain less income. Maybe he can't pay for his helping hands anymore that help him grow. Since he gets less income, he basically needs one less worker. This means that one of the 11 people is out of a job, out of an income, no bread, he starves. And the population goes back to 10. And then we have 10 breads bought by 10 people for $10. There's always negative effect somewhere.
Yeah.
It comes down to one very simple thing. The best thing for international and local trade is a rock stable currency, so that I can tell you, Kenneth, I am going to buy a bread in 2045 and it's going to be $1.
Yeah.
That allows you to basically plan ahead for 30 fucking years and still be on point in your expenses. So on the other hand,
to create that, wouldn't you need something that's sound money? So if you have something that's constantly inflating or deflating, then it's impossible to do that, right?
Yep, that's basically it. And that's also the problem with gold. And that's the reason why gold standard's not going to work. It's because they're just going to change the numbers. So only physical gold is physical money because it's physical. Once you have that gold coin in your hand and you don't have any debts, you have value. But if we're working in a gold credit system, or otherwise known as a gold standard, where a central bank has the amount of gold in the vault, and then it prints amount of banknotes, which represents its gold. If it's not a 1-to-1 ratio, well, it's a fractional reserve system. And for the last 500 years, we've had a fractional reserve system. So they can just change the leverage ratio. The higher the leverage, the more money they print. And considering that free money is very alluring, the same thing always happens. The leverage ratio goes up.
Yep.
Until it gets too high and we get a credit bust. So that's the reason why money as debt is so fucking stupid, because it always leads to busts.
Yeah. So you have a solution in your new book?
Yep.
I'm looking forward to it.
Yeah, obviously not going to say, look, I'm still poor. I'm not going to make a lot of money out of this.
Well, you got a customer here.
Oh, no. I'm not like that. No, I mean, I've invented something important. I'm going to not make any money off the invention itself. So I'm going to make money off the book. And I want people to actually, it's written as a good story. It's in the proofreading phase. So I've already sent it out to proofreaders. 2 of them has finished the first book. 1 should almost be done. And they say it's incredibly compelling. The review, well, obviously they're my friends, but still they are amazed about the amount of knowledge that's contained within. And I'm like, wait till you get to book 3. But it's going to be the best deal for money you're going to get this year, buying those books. I'm not going to price them too high because I want this information to spread as wide as possible. I'll self-publish them, probably with print on demand. It's looking like that anyway. Mainly because if I have to go through a major publisher, it looks like it's going to take 2 years if they even look at it. And that's not the kind of time frame I'm looking for. So we'll do.
Do you have a name for the books yet?
Yeah. First book is called, I'm releasing them all at once as a trilogy because you can read them independently, but they do interlock. So you can return to it many times. First book is called The Definition of Money. The second book is called The Definitions of Value. And the third book is called Ethereal Value and the Crypto Future. So
where can people find more about your work and the books when you release it?
Best place to follow me is on Twitter, @Desogames. I do daily research. I post a lot of free stuff there. Just go through my media feed and you'll see. You can find articles I've written on the economy, which are basically just a preview of the books. The books go way deeper. There's no double knowledge here. I haven't just copied articles into the book, but I do talk about the same things. So you can get a little preview there on desogames.com. Follow me on Twitch because that's where I basically express myself. I do Twitch streams, twitch.tv/Desogames. I'm basically Desogames Avery on the internet. And every Thursday I try, but every Saturday at least, I do streams where people just come to the chat. They ask me a question or they ask me to look at stocks and I answer them. Just me, a browser, and a question.
I'll keep all the links in the description below, so make sure to check them out and subscribe. Cool, man. Thanks, Kirian.
Thanks for having me.